Welcome to Cat Eye US Stock. We watch markets with calm focus and sharp instinct. Monday, March 23, 2026. Oil stepped back from the ledge and equities ripped. That was the mood shift. The tape opened tense, war premium, inflation fears, then exhaled on de-escalation headlines. End result, a clean risk-on session with broad participation, not just some little short squeeze in one corner of the market. On the S&P 500 Heatmap, it looked like a classic risk-on day. Most tiles green, just scattered red. Brightest spots, mega-cap tech and consumer discretionary, NVDA, Apple, Amazon, Meta, Tesla, and the key tell Cyclicals showed up too, so the rally didn't feel like some masked move hiding behind a few giants. Odd visuals in semis though. Micron was a sharp red outlier, while Broadcom lit up as a big green standout. So what was the money actually doing today? It rotated back into risk. Growth plus cyclicals because crude backed off, and traders treated it like an energy relief window. Consumer discretionary leadership, with Amazon and Tesla, screamed high beta appetite. Financials and industrials jumping in made it feel more structural, not just a one-factor tech pop. Energy stayed green even as oil cooled, while materials and healthcare lagged in the background. Here's the core tension the market traded: geopolitics into oil, oil into inflation expectations, and then into rates versus a market that wants to reprice growth higher. Today didn't solve geopolitics, it just reset the day's risk posture. One big tell: small caps outperformed. When the Russell leads, it usually says risk is coming back, not just hiding in the mega caps. But the fine print hasn't changed. This tape is still hostage to the next oil headline. On the chatter front, the market traded like it believed a talks and de-escalation story, and those kinds of headlines move faster than any confirmation. We don't have a verified list of what was said today, so treat any overnight sources say swings as just that unconfirmed noise. In a session like this, positioning and re-risking can amplify the move, right up until the next headline tests it. Just as the world braced for a total energy blackout, the clock stopped. President Trump officially hit pause on plans to, quote, obliterate Iran's power grid, citing a breakthrough in back-channel talks. Tehran is publicly calling his bluff to keep oil from spiraling. But this 5-day window gives the world a badly needed breather. Is this a real path to peace? Or just the calm before a much bigger storm? Don't let the headlines fool you. The pause only applies to power plants. On the ground, the kinetic war is actually intensifying. Israel just struck the heart of the IRGC in Tehran, while Iran is turning the Strait of Hormuz into the world's most expensive toll road. And with the US burning through billions in munitions to stop cheap drone swarms, the economic cost of this asymmetric war is starting to look a lot like the 1970s oil shocks. Tesla was a pure sentiment tell today. Tesla up about 3.5%. In a relief rally tape, that kind of high beta discretionary strength says traders are re-levering into risk, not hiding. But the caveat is the same as the whole board. If the oil story flips on a headline, these high-torque names can flip just as fast. NVIDIA did exactly what the market wanted on a risk-on day. NVIDIA up just under 2%. It's still the AI general. When it's green alongside a broad index rebound, it tends to validate the whole growth bid, not just its own chart. Today, it helped keep the megacap complex supportive instead of narrow. Amazon was a big piece of the discretionary story. Amazon up about 2.5% in context. That matters because it framed the session as cyclical and growth-friendly, not just a defensive relief bounce. When Amazon is leading on a broad green day, it usually means the market's leaning into consumer-facing beta. Broadcom was one of the clearest heatmap standouts. Broadcom up almost 4%. The signal inside semis was selectivity. Traders were paying up for specific AI infrastructure exposure, and that contrast mattered. Micron was sharply red while Broadcom was strong, a reminder this wasn't blind chasing across the whole semi-complex. Lockheed was the clean risk on tell in reverse. Lockheed down almost 2%. The story of the day was war premium easing, with money rotating out of geopolitical hedges and back into cyclicals and growth. That doesn't erase the risk, but it does explain why defense lagged while the rest of the board went green. Exxon was a subtle but important tell. Exxon up just under 1%, even as the theme was crude easing. In the bigger read-through, energy stayed green, likely riding the broader cyclical bid and prior strength. So this didn't look like a full unwind of energy exposure, more like a repricing of tail risk. Near term, the number one driver hasn't changed: geopolitics and oil headlines overnight. Today's relief can reverse quickly if crude spikes again. And the calendar adds fuel. Next week's macro gauntlet includes JOLTS and CB consumer confidence on Tuesday, March 31st, ADP, retail sales and ISM manufacturing on Wednesday, April 1st, jobless claims on Thursday, April 2nd, and the full employment report on Friday, April 3rd. Into that backdrop, keep watching the risk bellwethers, high beta leaders, and the oil proxies. Bottom line, risk on won the day, and it wasn't just a mega cap masking trick. Breadth showed up and small caps led, but the market didn't get clarity. It got a pause. From here, the next cue is oil, and the next test is follow-through. If headlines stay calm, this rotation can stick. If they don't, this same tape can snap back just as fast. Thank you for watching Cat Eye US Stock. Stay curious, stay calm, and we'll see you next time.